I mean, normally I just cover oil like this. We'll do a full oil rundown now. If you haven't got my free training already, remember it's underneath the stream or the video on YouTube. So oil is very, very interesting with the current market sentiment. Obviously, in the Middle East, there's a lot of oil, and you've got tensions. Things are getting worse. So people get a bit worried about it. They get worried plainly about whether there's going to be a supply or demand cut, essentially. So in other words, if people stop buying it, or they stop making it, and things like that. So I would say this point, the sentiment is more on the side of demand. So basically, I would say people are more slanted to the fact that if there is a problem, it's going to stop people being able to get access to oil, or you might have embargoes, or you might have some kind of soft power to stop oil going out of those places. That's a problem. Okay, it cuts supply, and therefore there's a higher demand. So if you are trading sentiment based, the problem with that slightly is that you are guessing a bit about what is going to happen within those tensions and where price is going to go. That's a big problem. It's much better to incorporate both price action or technical analysis and the fundamental side, because you never know how the fundamental side is going to change, but you can see visibly what is set in stone on the technical side. That's why I like technical analysis, because it's very, very factual. Fundamental analysis can sometimes be open to interpretation and a lot of guessing. Okay? The only real fundamental analysis that's concrete is central bank rates or economic reports, CPI, things like that, retail prices, stuff that you can actually see as a reading, and it's concrete. You can't really argue with it. It's there. Um, but you really need to mix in both. So the reason why you're seeing a bounce now is because you've hit onto this key price action zone. We did look long various times on oil. I would say at the moment it's safer, if you did have it long and you're holding those longs, it's probably safer to lock in those gains. You can see for the last few days you've gone sideways, so it wouldn't entirely shock me if that continues, just while you've got these things going on. There isn't really a clear market direction at the moment. But if you had it from 83 to 85, it's probably worth taking your gains, taking your profits. If you did want to buy it, you could likely buy it at those previous lows I just mentioned, but more so I would say if you can get under those lows, it wouldn't entirely shock me if you see a further bounce as you break down those levels of support and they're hit individually. You can see you've hit the same area over here several times. I think this is probably going to hold a lot more weight over here when I'm drawing these arrows. It's another layer of buying power slash support slash market rejection. So if you do come to 81 area, that may be ideal. I really wouldn't consider shorting this until it's much, much higher. I would say probably at least until you get to this point when I'm drawing this arrow now. And it's because you can see there's varying levels of price action there. Again, it's absolutely no surprise that that causes a short area, so well done if you shorted it. It's just in line with what you've seen already, okay? If you do push to the upside, it wouldn't shock me either if you get above this price action level and you actually come further up to price action levels of rejection like this one, where I'm drawing the end of this red arrow. That wouldn't entirely shock me at all. And that would come nearer $98. I planned that level for a long time. I posted about that level for a long time. That is really where I would go for. So my bias on oil, I guess sentiment wise, I think you'll come up. I would rather be hands off. At the moment, I'd rather exit longs and just hold out. If it comes up, I'll take it short. If it comes lower, I'll take it long. But because the sentiment is so mixed and you can't read through it at the moment, it's just a wait. There's no point. I know it's fun, but there's no point in guessing what is going to happen in any market because you just don't know. You're just gambling, right? Use price action as a factual basis, wait for the news to instruct you as a factual basis, and then make a factual opinion on what you can see. Okay, it's much more of long-term strategy, effectively. So that is oil. As I said, remember, don't forget my free training is underneath. Euro CAD and Euro GBP, I can go over. Thanks for the question. Um, in the chat box, we'll cover that right now. Not seen you here before, so welcome. I might have, I'm not sure. Um, welcome. I did a post on CAD, I did a post on the Euro Pound as well. I'll cover them now. So what you have on the Euro CAD is quite nice, really. At the current point, if you go and you get onto your tool area and you don't forget where the channel is, you can see it looks a little bit like this. Okay, now you can draw parallel channels in different ways based on the amount of candles you input, the amount of lows you're looking for, and that will tell you how sustained the trend is. But you can see on your weekly, you've had peak here, low, peak, low, and you're coming back up. Now, as I always say, the point of price action, price channels, is to maintain a trend. Markets move in trends. The higher you get to the upside on a downtrending channel, the more probable your short entry comes. So you're not all the way up to the top. It's not always going to be the case that you do get all the way up to the top, right? And it probably would have looked slightly different beforehand, and it always will. But nonetheless, the closer you get to the top, the more short it is. Now you can see on your weekly, you're hitting into minor levels of price action, as I'm labeling, and also you're hitting into various key moving averages. So at this point, I would rather be short, okay? If I swap to the daily, you can see if you were short, you may be in profit, but you can also see that, and this is really important, you can see that historically on your daily chart, ever since the start of the week, every push to the downside has been significantly rejected rather quickly. So clearly there's very early buying power, and hence you may decide to hold off those entries to the short side. And that coincides a lot better with your parallel channel. Now you can see tons of daily resistance all along here. Okay, so you can see slightly higher is probably more ideal for shorts. Okay, so I would say if you haven't shorted it yet, I would much prefer it 1465. I've got orders there myself, and that's what you'll need. You've had a considerable up move from here. Okay, and I just think you'll be better off slightly higher. The stock oscillator, yes, it's high. I absolutely know, but it doesn't mean it can't go higher. And if you swapped your weekly, is it high anymore? Okay, I don't think so. It doesn't look like it to me. It's about midway. So, like I said, there's more levels of key resistance higher up. You're going to be higher up within your price channel. I would far prefer this short. You absolutely shouldn't be buying it. Yes, I think it could get higher. Doesn't mean I'm going to buy it. It means I'm going to hold off. And if you look at the long-term trajectory since COVID time and beyond, you can see you've just come down on this anyway. So I would look short higher up. I wouldn't consider any longs unless you get much, much lower. Hope that helps for EuroCAD. Let's cover Euro Pound. Euro Pound, similar bias. What you have seen on Euro Pound, as I posted, is a short area. Again, very early rejection, so you might have taken some minor gains on that fall. But you can see slightly higher above this high, like I was just saying for the EuroCAD, you can see that there is further levels of price action on your daily or price rejection. And for that reason, I would far much rather be a short slightly higher up here. So yes, it is a short at this point. If you're slightly less risk averse, you could probably take it. If you're more risk averse and you're teetering along and you're learning, I would short higher up because again, you've got key levels of support. Okay, you're shorting very close to where you've previously seen a long side movement. So you know there's buying power there. You come off from this, which is really significant because you can see all these hits on this level have resulted in an up move. Okay, so you're uptrending on your daily, downtrending very long term, and I would rather short at this point because you've just got more weight to the short side. It comes in line with everything you can see over here. Okay, you've got to be referring to the left-hand side on your charts. You've got to understand the only thing you can go off is what you can physically see. And you'll see many, many parallels, especially with the Euro Pound, because it's very choppy. If you look at this area where I've labelled there, and then you look at this one, you'll notice it's very, very similar. Okay, so you also get small areas in between. So my bias on the Euro CAD pound alike is short, just slightly higher. Don't pretend that your stock oscillator or your RSI or whatever you're using can't get higher, because it can. If you're purely trading on the basis of a high stock or a high RSI, you will be, well, you shouldn't be surprised if the price then goes against you. So just to be clear as well, anything lower, and I like it long. There's a lot of key support here. Okay, it really wouldn't shock me if it turns out that is your level of key support. Coming back to these key areas over here, like this key moving average, your 20 MA. Okay, any fall, I would look long. Any significant rise on the euro pound, I'll look short.